guys, this is Martin from Secrets, the channel for learning about trading and investing, and welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week and then how we can plan for a better trade for the next day. And this is analysis for the week that's starting from Monday, May 23rd, 2022. So let's deep dive into the charts first. This is the weekly charts of Nifty and the Banknifty that you see on the right side, right? So clear bounce up move, another bounce up move, and it's a wide range bullish candle, right? So wide range bullish candle can be seen on both, and it's very evident that we are at a major support zone, right? With the retesting of this previous breakout zone the second time and third time and the fourth time, kind of, right? That's on the both the indices that's the case. So a CIP bounce from here on the weekly basis also is possible, right? It can further move up from here because of change in priority bounce is possible on the weekly right now, right? So that's weekly charts and daily charts. Let's see this. So very volatile week one. If you look at the last 5 days, it was a V shape and then an inverted V shape. Same with Banknifty also, a V shape and an inverted V shape. That's what has happened, right? So remember, we have a major gap resistance that's up there, and same with the case of Banknifty. We have a resistance that we have to overcome the level. We'll see that in the levels, right? This is another view on the Nifty and the Banknifty. You can see that all the moving average supports are given up, and it's a downside trending channel, and that's what is visible here. So let's look at the numbers. Like it's 500 points lost. 500 points gained. Bounced up after a big fall that has happened to retest the previous swing low. So it's an almost 3.2% of up move. It's a green bullish wide range candle that you can see on both indices. 4% of the Banknifty, 1,300 points up on the Banknifty also, and a wide range bullish form there as well. Remember, so the overall corrections, if you see, it's like 15% and 20% respectively on the indices that has happened. So the substantial amount of correction that has happened, and now it's a crucial point of a M pattern breakdown on the on the daily candle is what you see there. So daily also is last Friday's candle is also wide range bullish, and as you have seen, it was very volatile week last. It was very volatile, where we have a big gap up move and then a big gap down move. And there is also a volatility divergence. If you look at the Bollinger Bands, you can see that there is an outside inside pattern that may be forming, where the price has moved outside of the band and then trying to make a W pattern, and then that would mean that it can go up to 17,000 for sure if that works out. So there is a potential of a volatility divergence concept also. With a W pattern breakout that is possible. There is a weekly change in polarity bounce that's possible, and the levels to watch out is 16,625 on the upside and 35,150 on the upside. So because there is a previous gap resistance there, which could be a hurdle on the up move. So Bollinger Bands, if you see, this is clearly indicating there is a bearish downside expansion and spillover, and then walking on the bands, and then a bounce up from there, and then right. So that is exactly what you can see is so Bollinger Bands clearly saying it's still bearish, and any green close above the median OD would indicate that this may be the end of the down model. Then it's clearly indicating the bearishness on the Bollinger Bands. Look at the support resistance levels right now. So daily charts, we can see that immediate support would be 15,850 to 15,950, which is a Fibonacci 16-1 retracement level, and above that also you have a support at 16,100 and 16,200, which is closed yesterday. And if the Fibonacci 16-1 retracement level is lost, then we come back to the 15,500 to 15,650, which would be very close to the which would be exactly where the previous swing low is there. And if that breaks, we go back to 15,350, 450 first, and then 15,000 kind of levels. Similar to the upside, the resistance would be at 16,350, 450, which is Fibonacci 50 retracement level. Above that, you have a gap resistance, which is at 16,550, 1650 first, and then 16,700 to 16,750. Then you have the resistance 16,800, 16,900 Fibonacci 38 retracement level. So after that, you have the rounding number of 70,000. That's the resistance support of Nifty. Banknifty, if you see, you have the supports that can be seen 32,400 to 32,800. That's the previous. That's a swing low that was made, last week. And then if that is given up, then 31,800, 32,150. Then if that is gone, then 30,000. So that 31,000, 32,000 would 150 would be a previous swing low kind of levels. Previous major swing low. Right. This is another swing low that is probably made. We don't know that. And before that, we have a very old previous swing low, which should be coming to 32 points. So if that breaks, then you go back to the 31,000 kind of levels, and then it goes like that. So downside. So upside, the resistance would begin at 34,350, 34,750, and then you have a gap resistance, and clearing of that would be 35,300 Fibonacci 50, and then 35,600, 35,900 would be the next resistance, and then 36,300, 36,800, that is Fibonacci 38 retracement. Then you have another resistance that's coming. That will be cleared only at 37,500, which is Fibonacci 23 retracement level. That's where we can see that probably the previous downfall may be done with, right? Until then, we have to be assuming that it's a down sliding trend line move, that is price action that's happening on the indices. So moving on from the price action, we are getting into the momentum. The last week what has happened is it has fallen to the bearish, and now it is climbed back to the sideways on both the indices, so you can see. So momentum has picked up on Banknifty also, right? So no divergence is seen as of now, right? And ADX, the trend indicator, ADX remains bearish, but you can see that it is heading towards a crossover on the daily time frames, and it is a bend of a strength indicator that has happened, which indicates that the bearishness is slowly reducing on both indices. You can see that the rising ADX bend, strength indicator bend, and DMI negative already. So in short, the short term and the medium term trend is bearish, remain bearish. It has still not changed. It takes some time. Momentum, however, has climbed back to the sideways on both the time frames, is what we can see, right? Volatility slightly moved down 1.5%, very less, but still about 23.10 to be precise. So you need to be cautious. Anything about 20 means that there is uncertainty that is left behind the market, right? So you know what has to be done: way to cut short position sizes, and also trade cautiously, right? Hedge your positions for overnight. That's exactly what you have to deal with when the sentiment goes wrong, goes against you, right? Now short covering, and short covering is what you see in the futures open interest data analysis for the Nifty as well as the Bank Nifty. So short covering is sometimes very powerful. It means that the people who had gone short now covering and then going long. So that could be a big up move that could turn out to happen on Monday, unless some other events takes it over during the Sunday, right? So May 26th monthly expiry is for the options data analysis, which you'll be seeing in the next slide. Before that, the put call ratio, the PCR, right, the sum total of all the puts and the calls, right? That ratio seems to be 1, and it's more than 1.11. It's actually a mistake. For Bank Nifty, it is 1.11, even more bullish. So put call ratio is clearly showing bullishness, and futures open interest is showing bullishness. Only thing is fixed is slightly about 20. So it's at 23 levels is something you have to be cautious. And open interest data, if you see that there is some call unwinding that has happened, and put addition has happened on both the indices. A lot of put addition has happened on the indices. So you can see that there's like bullishness on the options monthly expiry data also. But look at the level 16,000 and 17,000 is where the market participants, option sellers have written the puts and the calls, right? So it's where the highest support and resistance can be seen. 15,000 and 17,000 is the second level of support and resistances, and 34,000 and 36,000, 2,000 points gap is where the highest put and call writing is seen for the next upcoming monthly expiry for the May 2022. 33,000 and 35,000 is the second level of highest put and call writing seen for the Bank Nifty, right? So we have seen the put call ratio in the open interest. So overall bullishness is there in the open interest analysis. That's for PCR, futures open interest, and options open interest, right? Now sectorial watch, if you see the industrial sectors, one thing to note is that IT is the only sector that moved down last week, right? 2.75 down, and still clearly in the bearishness on both weekly and daily charts, right? And from the momentum perspective, right? But you can see that pickup move has happened in the metal, auto, pharma, FMCG, realty. All of them have moved up. Look at 7.4% of green because of some fundamental news in China or something. Right? So pickup move has happened. Bounce up has happened. Metal is closed green 7.4, auto green 5% up, auto 5% up. Right? And pharma is 3.5%, FMCG is 4.5%, and realty is 4%. So all of these momentums in the short term has turned into sideways, which was bearish, some of them, right? So that's a very good thing to see, but you just have to wait for all of these momentum to climb into the bullish zones from the sideways before you can take up any stock picks, from the top down approach of strongest sector and strongest stocks in that. So wait for some more time is what. So this is what we're talking about, right? IT fall down further, but otherwise you see a bounce in metal, clearly big bounce, and that too metal is bounced from a support of RSI 40, which is very bullish, and it is consolidating, and then it could be an attempt to take out a lot of resistance that's an upside. Remember, we had a failed breakout that happened on the metal sector earlier, and auto, if you see, that is also clearly trying to take out. Not succeeded yet. The previous resistance is what he is trying to break out of. Result sideways clearly seen. Trend is switching to the bullish zones. Pharma, you can see that's a bullish candle again. It's within a downside channel. We've got to see whether this resistance to the upside is taken or not. Even that also has taken an RSI support 40, which is similar to the metals. Pharma is also showing some bounce up, good bullishness, which can sustain. And coming to the FMCG sector also, the charts are not coming here. Let's quickly go into the FMCG sector and see them directly, since it's not here. So right, so big 5% up move is what you can see there. Big bounce up from NO. So this suppose seriously taking this is a hammer pattern bounce that has come from a very long support is what you see there, right? And finally, reality also has taken a support of cup and handle breakout neckline zone, and then momentum is climbed back to this into the sideways zone. So so all the sectors except IT is back into the sideways. IT is there to recover from the Nasdaq fall, basically, right? HDFC had slipped off. It's a heavyweight analysis that we're doing. HDFC bank, you can see that it is trying to climb back into this support zone from where it had slipped down. Remember, it is still in the bearish zone, so we'll have to just wait. HDFC on the same time is also formed an inverted hammer and then formed a bullish candle, and then almost into the sideways zone. Try long way to go up before it can clear the resistance on the upside. Right. So let's look at the big move. Let's just start. So weekly candles are showing that it is a big bend and upward of the momentum, trend crossover, and huge up move of more than 5% at least. So it's an 8% up move, nearly an 8% up move. It has happened from the correction. It's a price factor. It's a cup and handle, a handle formed breakout, and then it has taken a correction retracement exactly at the neckline of the breakout, and then it has bounced up. So it's a change in polarity bounce also, and most likely it could slowly take out the previous resistance also and move up ahead. That's what it looks like. So Reliance showing bullishness. The HDFC twins are trying to regain the lost momentum. IT, clearly showing that it is corrected a lot. It is corrected as much as the Nasdaq is corrected, nearly 30%, you can say, right? So momentum is in the bearish zones, and we just have to wait, right? Tata Consultancy also an active stock. It is the strongest among the Indian stocks as such. Has slipped into the sideways zones last week when the Nasdaq crashed. And all the recent has crashed last week, and then it had a big slip from the major support zone, but still managed to make the channel bottom is what you can see. So both the IT stocks, you just have to wait and see whether when would the bearishness end. You have to just wait. So despite the US dollar peaking to 78 levels, it's not helping the big bearish moves that's happening across the globe, right? So IT is reacting exactly to that. ITC Bank is also seeing a bounce up from a major support zone, which is ascending triangle breakout, that happened several months before, and then it seems to have taken as about exactly that place and then formed a open is equal to low bullish pattern, and it's taken a support from the RSI 40 also, which also indicates clear bullishness. That's there. Kotak Bank, if you see, you can see that it has been doing good last 4-5 weeks on this particular stuff, even when all the other sectors are not going good. So that's what you see here, right? Sideways movement, and sideways movement from the momentum perspective, but clear bullishness can be seen since several weeks. And but remember, it has a lot of resistance on the upside. Even now, it is just managed to close above the major resistance from where it has been, finding some difficulty to move, but it stands out as compared to other banks like HDFC and HDFC Bank. Right? It's showing more strength, and it has a very good support on the downside. Momentum is sideways, right? So ICICI Bank and Kotak Bank showing signs of trying to climb back and move in the sideways zones, while HDFC Twins are also trying to climb back in the sideways, but that is not yet succeeded for the HDFC Twins, while it has succeeded for the ICICI Bank and the Kotak Bank. Right, and IT is still bearish, and the performing star is Reliance. Right? So institutional participation, if you see, it was like 20,000. Oh, these numbers are not calculated yet. Right, so that's right. So that too. Yeah, so the numbers, that figures are not updated yet, right? But you can clearly, quickly you can go to that and let's see that there is clear selling that has happened, right? So it's so the exact amount is not counted here, but you can see that on each of the day in the last week, 20th, 19th, 18th, 17th. So look at the selling that has happened, nearly 5,000 crores on May 19th, so Thursday, expiry day. 5,000 crores, 4,900 crores of selling in the crash has happened from the now 1,265 crores of selling, then 1,200. So that makes 2,000, 4,000, right, 8,000, and so it's more than 10,000 crores at least. That's a kind of selling that is happening. The FDIs have been trying to catch up and sell and buy as much 2,000 crores buying, 3,000, right, small buying on Wednesday, and then it's 2,000 crores, and right, so it's not enough to catch up, right? So good buying from the FIs, but from the DIs, but FIs have not even bought anything the entire month, and has been selling heavily in the 5,000 crores kind of levels is what we have to see, right? Which is a worrying factor that the FIs are not FIs continue to sell, right? Now going on to the currency, you can see that the US dollar index has cooled off a little bit, right? It's a 0.5% of down move, and still it is at 103, its historic high levels. And USDINR is also moving up and made an all-time high of 17-year high kind of levels at 77.88. Nearly 78 is where the rupee is weakened to, which is obviously a concern for an economy when the when the nation's currency is moving down. Now look at the US markets, right? This is where the action happened last week. 3 to 4.5%, nearly 5% down move happened in the Nasdaq, I believe. So big downfall has happened in the US market, and that's exactly why we had a dip and then we had a bounce up, right? And so that down move happened in Dow Jones, Nasdaq, and S&P 500 indexes, and we had a we responded to that, and then we bounced back, right? So if you look at 30% of correction, 20% of correction is what you see, in the major indexes. So that's why it is also a crucial point for the US market index as well as ours, right? Any breakdown from here would indicate that probably it's going to be a very long bearish period that's going to come. So this week, the May expiry, closing the May month, this coming few days would be very crucial days as far as markets are concerned, because it's going to be a decisive week, right? The crude, I'm not sure, further should it have been still above the 109.75 kind of levels, and gold moved up but slightly 2% only, right? And gold, so this is the US market crash. Dow Jones, clearly you can see that it has slipped down on the edge. So that's a third, no, that's a 20, nearly 20%, 18%. This is a 30%. This is also nearly 20% of downfall that has happened. So anything from here downside 30,000 below would indicate that US markets have a recession or a bearish days are ahead. Crude oil had moved up further with momentum. Momentum is in the bullish zones, and it's not good. Right? Gold has bounced up, taken a support and from the previous major support zone, and then trying to climb back. When the market is crashing, obviously the gold will move up. That is not happening when last week, but this week it has managed to climb up. And yeah, so otherwise, so weekly basis, if you see, the gold is still inside the zones, but daily it remains in the bearish zones. It is a long way to go before it can take out this resistance to the upside. So just to wrap up, yeah, so global cues, if you see, the US dollar index is cooled off slightly, but at all-time high levels. Rupees weakened to lowest levels. Crude oil is rising above 110 till, and yeah, your markets are crashing. That's a concern, right? So two stock picks for actionables, both in the short sides. One is a Titan company. Reasons why is that it is major resistance. It is unable to break that. It has slipped from the channel on the weekly basis, right? And it is almost in the bearish zones. You can see even on the medium term, there could be a slip down to this 1785 kind of levels. It's possible. So some swing opportunities may be there, but do it with the. And there is also a gap, which got filled, and it could actually support. But gaps, yeah, forget about the gaps. But bearishness is evident in this when the channel slippage has happened. So it could give swing trades on the downside. Also, Titan is a good company when the market goes bearish. You just have to follow the trend. STF Asset Management also is in the bearish zones clearly. Downside trending channel. Major support zone on the medium term is reached, and there will be a very long red white range bearish candle, and it's sliding down. So it could give potential swing trades for a few days, right, at least. Trend is bearish, momentum is bearish, so price action is bearish. So two swing trades. So Nifty, we have a setup that is there's a double diagonal counter spread as we usually do. This nearly 80% of probability is there, and then this one is also okay if you're targeting for a 2%, 2 to 3% max. No, at least 2% of target would be ideal, and it is giving a very good range between 15,500 and 16,800 nearly. That's a very good range that we are getting. So very less likely that that range gets breached, and even if it breached, slight adjustments by rolling up or down can help if the market moves in either of the ways, right? So it's a purely risk defined strategy that can give that will not wipe out your capital, and you know exactly what you're doing, right? And position size as per your capital, risk management things, right? As per your capital, but since the VIX is high, it would be ideal to cut short your position size and cools up a little bit, right? So market view is, I have a neutral view because I tend to be bearish, but the thing is, it is a major support and it is bounced up, and then there is a very good amount of correction has happened, and the short covering can be seen on the open interest, and so overall there is a mild bullishness that which stops me from going bearish. So it's a neutral view basically. That's what I have, because we had a lot of zigzag moves that happened last week, right? Big gap downs, big 400 plus points of gap downs and 400 plus gaps. That means it's a very major support zone. People are sitting, bulls are sitting there to buy. Right? And we have shown the strength, that support has shown strength, and it is bounced up. Now any fall back to that may weaken that support and then it could fall down. But the worry is that it fixes about 23, and Fyers are not storming. Trend is not rose to the bullish zones or sideways zones. No? So the trend is still bearish, and momentum is the thing that has caught up, and its price action is also positive. That's a reason for the neutral view. With mild bullishness also, that's possible. Right? So the correction has happened a lot, on both the US markets and our markets. So we have major differences on that. So any breakdown from here in our markets or the US market will indicate that we are where we are zone. We have to be looking only at downside from then on, is what I would say. Right. So RBI rates that happened early this month, US inflation rates, Fed interest hike rates, and US forward, and all these uncertainties are still there, is evident with the weeks being about 23. Right. The crude oil is about 110 rupees weekend, which Ukraine war thing is still there. All of these adds up fuel to the bearishness. Right? Positive factor is that look at the retail participation, even when the Fyers are selling because of money flying back to the home country. Right? So the confidence in the retail in the Indian markets are evident from the DI is buying continuously and holding the market from falling. Right? And the DIX 23 above is worrisome, so you have to be careful. And so it is still there. Cut short your position size all you can do. Right? So 18,150, 38,800 is a long way up there before you can say that the up move is again started, and then you have trouble because they are the swing highs. Similarly, downside 15,650 swing low and 32,100 would be the place here to look. Any breeze from there could indicate that it's an M pattern daily breakdown that may be happening, and it would be a big bearish downward set maybe ahead. So always do not go for overnight positions unless and until you have clearly defined, risk defined strategy that is put in the very your capital will still not be wiped out. Right? So be cautious. Intraday V shapes, even positionally we are having V shapes and inverted views on daily charts that are happening. That means if you're taking a 1 week or a weekly trade, you go up 1,000 points and then come down 1,000 points. So it's very difficult to manage risk defined strategies also. That's the kind of way market is moving, so we have to be very careful, and the only thing that's in our hand is to cut short the positions and then manage your risk. Right. So that's what my view is. Overall, I'm neutral. I don't have any bias particularly strong on either side, bullish or bearish, but there is some bullish bias. That is that I cannot be bearish when the market is bounced up and made a big move on from the major supports on multiple times, right? So that's a neutral view with mild bullish bias is what I have. I know, when the charts are clearly showing the trend is not reversed, but there is some indications that it may be over with. So keep fingers crossed and then stick to the view and have your risk defined. So that's all I have. If that helps you to frame your view on the market and your trade plan for the next day, consider hitting the like button, share it to maximum. If you're not subscribed, definitely please do the same. And we have very few subscriptions, and seeking your help in this regard. Thanks for watching. Happy trading. Happy learning. Bye.